Well, now we're in quarter four of 2024. And if you're looking to close out the year strong and you've got buyers who want to buy but don't have down payments, here are four different ways that your buyers could come up with their down payment and closing cost and not have to save for it. This will be a quick presentation, 2 or 3 minutes tops. It won't be a waste of your time. So keep watching. Number one, they could take a withdrawal from their 401k, and depending on what the terms and guidelines are in their 401k, they might be able to borrow the money and or take a distribution without any penalty. But before they do that money grab, they need to talk it over with the financial advisor or whoever is managing that 401k to make sure that the terms and conditions allow for that so they don't get hit with an unexpected tax penalty. So there's way number one. Number two, gift funds from a family member. We've been having many of the people I do home loans for this year getting gift funds from a family member, enough to cover a down payment and closing cost, or down payment or closing costs. So they can get those gift funds from a rich friend, family member, and hopefully that will give them what they need to get them into a house. Number three, down payment assistance program. So, depending on where you live, your local state government may offer programs that provide funds to buyers to help them buy a home. Every county, every state is typically different. So, you'll need to work with an experienced loan officer in the state that you are doing this in so they understand the ins and outs of those down payment assistance programs to ensure that that is the right move for your borrower. And they typically come with some strings. There might be some income limitations. So again, just work with an experienced loan officer that knows the ins and outs of those local programs. Check with your local government and to see what's available in your area. And finally, seller concessions. Your buyers don't they don't have a 401k, they don't have a rich family member. That's okay. As their agent, you can negotiate with the seller to contribute a portion of their proceeds as a credit at closing. Now, that cannot be used for a down payment. It can only be used for closing costs and prepaids. And please keep in mind, you cannot spend any leftover seller concession funds on anything. You have to make sure you've asked for a little bit less or right up to the line on what the actual costs are going to be for your buyer, or in this case, my borrower. So if closing costs are $7,000, closing costs and prepaid. So appraisal, title work, insurance, prepaid interest, right? Those things, if they're $7,000, but we got 9,000 from the seller, that extra 2,000, there's nothing that can be done with it. So just make sure you ask for a little bit less than what you think you're going to need. No one's ever going to be able to nail it down to the penny. But what a great way to save your borrower, or excuse me, my borrower, your buyer, a good chunk of change. So I've seen it a lot this year. They've got the down payment, they don't have the closing costs. So seller concessions, especially in this market with more listings coming online, so more motivated sellers out there might be willing to give up a little bit of their net proceeds in order to just get the home sold. Anyway, I know I went through that quickly. My name is Aaron Gallagher. I'm a mortgage broker with Edge Home Finance. I would love to become your number one mortgage guy. Reach out to me anytime, 217 618 6811. Have a great day. I hope this was helpful.